This is exactly how you use smart money concepts in Confluence with a trend following strategy, okay, a trend continuation strategy. So this is a trade that I did take on EURUSD, okay. The maximum amount of profit that was available was around 6.1 to 6.2 RR. So if you risk 1% on this trade, you would have made just over 6%, okay. What I'm going to do is break down this trade step by step in this video, and I'm going to show you my exact thought process, my mechanical strategy, exactly what I used in order to execute this trade. Okay, so let's work things back to the morning and walk through this trade for you guys. Okay, so starting things off, we always want a directional bias. Okay, you can see here the moving average. This is a 50 moving average. This is Euro USD on the 15-minute time frame. You can clearly see this moving average is sloping to the upside. That indicates that there is some velocity, there is some great momentum in this market. Okay, and that is because it's sloped to the upside. Clearly, this is a buyer's market. So I'm trading momentum. So I want to be following where the most recent momentum is. Okay. So looking here, you can see we're sort of just ranging. We know momentum's to the upside. There's nothing really here that I'm interested in. Okay, you can see the time is 06 in the morning, so we're 6 a.m. We're waiting for around 8 a.m. UK time for the London session to begin, because of course that is when the high volume does start to come into the market. Okay, so let's start to play this out a little bit. Okay, you can clearly see we have a clear break of structure to the upside. Okay, so we can mark on our BOS or boss to the upside. Okay, so that's our boss to the upside. You can see this is a strong move. There is 1, 2, 3, 4, 5 consecutive candles to the upside, bullish candles indicating strong bullish momentum. Okay, we don't want to see any pullbacks, any bearish candles within the break. We want to see a solid break to the upside. Okay, we can then go ahead and mark on our guarded low. Okay, so this is our lower high in the market. So we have a high, a pullback, a lower high, followed by a higher high. Okay, once we've seen a higher high, we want to see a pullback into our extreme supply, and that's when we can look to pinpoint a entry. Okay, so in regards to, let's just mark on our guarded low. So guarded low here. We do not want to see this guarded low broken. We don't want to see any candle closes below here. That would invalidate our long bias. Okay, so any closes below here, we're not interested in longs anymore. Okay, so in regards to our extreme supply, this is the last bearish candle before the break of structure. Okay, and we want to see 50% from that open down to our low. Okay, so we can mark on our extreme supply, and that is the zone that we want to be looking for longs from. Okay, I then set a pending order, a pending alert just above this extreme supply, and once I'm alerted, I'll be notified, and that's exactly when I want to be entering the markets. Okay, when price is at our extreme supply, it's pointless watching the markets if price isn't in your area of interest. Okay, so we play this on a little bit. You can see here, this is the high that was created. Therefore, this is the liquidity that we're going to be targeting to the upside. As you know, with trend continuation strategies, price is always reaching for the liquidity. Okay, so we see a pullback clearly to our extreme supply. Okay, what we want to see at the extreme supply is at least a 50% rejection from this area. Okay, so from candle high to low, you can see price is rejected more than 50%. You can actually see it's around 60 to 70%. Okay, so that is more than enough for our confirmation entry on the candle close, the 15-minute candle close. Stop loss below our guarded low, so that's 4.6 pips. Add a couple pips to that, so 2 pips onto that is 6.6 pips, round that up to 7 pips. Okay, Target, of course, is our liquidity area. Okay, so you can see here our liquidity area is about 2R up to the high there. Okay, and then we're of course going to be looking for some more continuation to the upside, because after all, this is a trend continuation strategy. Okay, so play this out. You can see instantly 2R was hit, and then we're just going to we're going to trail stops and just allow this trade to continue. Okay, so we're going to play this out. You can see here price is up to around a 6.2R. Just going to continue this out. You may have been stopped out, depending on how you trail your stops there, at 3.5R. Alternatively, you know, if you see this push to the upside, you can also you know, exit on the pumps. Okay, so you want to exit when price is pushing hard to the upside. Okay, personally, I was out for a 3.5% gain on this trade. Of course, price went on to do a lot more. However, when you look at the data that you've collected, that I've collected, you know, around 3R is a very sensible place to start taking heavy profits. You know, 3R. Okay, so that's exactly basically my strategy. It's a trend continuation strategy. It uses market structure, it uses liquidity, extreme supply, and smart money concepts, of course. Okay, so yeah, guys, please like, comment, and subscribe if you do want to see more trade breakdowns, more videos just like this. Okay, and I'll see you guys in the next one. Thank you very much.